This video is not financial advice. I am not a financial advisor. This is personal analysis for educational purposes only. Today, we are going to do a deep institutional-style analysis of Microsoft. This is not a surface-level overview. This is the type of analysis used by large asset managers, banks, and institutional investors when they decide whether to allocate capital. We will look at fundamentals, earnings, artificial intelligence exposure, technical structure, macroeconomic factors, and finally arrive at a clear buy, hold, or sell view for the next 6 months. All analysis is USD-based and focused strictly on Microsoft as a standalone investment. Microsoft is one of the most diversified technology companies in the world. Its operations are structured around 3 core areas: intelligent cloud, led by Azure, productivity, and business processes, including Office 365, Dynamics, and LinkedIn, and more personal computing, which includes Windows, Xbox, gaming content, and search advertising. This diversification is important because Microsoft is not dependent on a single product cycle or market trend. It generates recurring revenue across enterprises, consumers, and developers. In its most recent fiscal year, Microsoft delivered double-digit revenue growth, expanding operating income, and record free cash flow. This matters because cash flow, not narratives, ultimately supports valuation. From a fundamental perspective, Microsoft remains exceptionally strong. Revenue growth continues in the mid-teens despite the company's massive scale. Operating income is growing faster than revenue, demonstrating clear operating leverage. Free cash flow remains substantial, supporting dividends, share buybacks, and reinvestment. The balance sheet is one of the strongest in global equities. Microsoft holds large cash reserves, carries limited financial risk, and has no liquidity concerns. Interest coverage is high, and debt levels are conservative. Valuation requires careful consideration. Microsoft trades at a premium multiple relative to the broader market. That premium reflects high earnings visibility, recurring subscription revenue, structural exposure to artificial intelligence, and strong returns on invested capital. In my opinion, Microsoft is not cheap, but it is fairly valued as long as current growth trends remain intact. Artificial intelligence is now central to Microsoft's investment thesis. Azure has become a major global platform for AI workloads, and enterprise demand for AI computing power continues to accelerate. Microsoft has embedded AI directly into its ecosystem. Office products now include Copilot. Developers increasingly rely on GitHub Copilot. Business software such as Dynamics integrates AI tools, and security and healthcare platforms are increasingly AI-driven. This is important because Microsoft is monetizing AI through productivity gains rather than speculation. Capital expenditure has increased significantly to build AI infrastructure, which has temporarily pressured margins. In my opinion, this spending is strategic and necessary, not excessive. Large institutional investors typically view this as front-loaded investment designed to secure long-term competitive dominance. Microsoft's most recent earnings report was strong across all key metrics. Revenue exceeded expectations. Earnings per share beat consensus estimates. Azure growth re-accelerated. Management guidance remains cautious but constructive. The company expects continued double-digit growth, stable operating margins, and sustained demand for cloud and AI services. Importantly, Microsoft's contracted revenue backlog is at record levels, providing high visibility into future earnings over the coming quarters. The broader macroeconomic environment is currently supportive. Inflation is trending lower, and interest rates are expected to gradually decline. For Microsoft, this matters because lower rates support equity valuations. Enterprise IT spending becomes easier to justify, and future cash flows are discounted at lower rates. In my opinion, Microsoft benefits disproportionately from monetary easing, given its growth profile, balance sheet strength, and cash generation. That said, inflation is not fully defeated, and rate cuts are not guaranteed, so this remains a conditional tailwind rather than a certainty. From a technical perspective, Microsoft remains in a long-term uptrend. The stock trades above its major long-term moving averages. Pullbacks have been orderly and well-supported. Price action suggests accumulation rather than distribution. Momentum indicators point to consolidation, not exhaustion. In simple terms, the trend remains intact, and there is no technical evidence at present of a structural breakdown. No investment analysis is complete without addressing risks. Key risks include valuation sensitivity if growth slows, rising competition in cloud and artificial intelligence, execution risk related to large-scale AI infrastructure investment, and ongoing regulatory scrutiny of large technology companies. Macroeconomic shocks, including renewed inflation or global instability, could also negatively impact sentiment. That said, Microsoft is among the best-positioned companies globally to absorb these risks. For a 6-month investment horizon, my opinion is hold with a bullish bias or buy on pullbacks. Microsoft is not deeply undervalued, but it offers strong earnings visibility, structural exposure to artificial intelligence, defensive qualities within growth, and a supportive macro backdrop. I do not see compelling reasons to sell at current levels unless the macro environment deteriorates materially. This is my personal analytical opinion, not financial advice. If you want more institutional-grade stock analysis like this, subscribe to the channel and comment with the next company you would like covered. Thank you for watching.